Prices are softening across much of Summit County, specifically under the $2 million price point, while others, like the luxury ski and ski out segment, is still holding strong. In this video, we're going to cover where prices are dropping and where they aren't, how inventory is growing and what that means for buyers, why short-term rental policies are changing the investment game, and how to move smart in Breckenridge, whether you're buying, selling, or investing for the future. My name is Anthony Soul with Live Sotheby's International Realty. I'm a local real estate expert here in Breckenridge, and I own multiple short-term rental properties as well as my primary residence, which I am currently sitting in. So I'm happy to help you guys with all of your real estate needs here. Let's jump right into the video. Number one, the Breckenridge market is cooling off. Median sales price is actually down 0.5% year over year, while the average sales price is actually up 11% year over year. And for the first time since pre-pandemic, we've crossed over 650 residential listings right around Memorial Day, which we haven't seen in a very, very long time. Like I said, pre-pandemic, so we're talking 2019. So let's talk a little bit about what all of this means. The median sales price is down 0.5%, while the average sales price is up. It's a little confusing, but the median metric factors out all of the crazy outliers that we get here in Breckenridge. Those outliers are the properties that are selling for $6 million and higher. Typically, you don't see too many of those sales, but a few of those sales will skew the data to make it look like the prices are actually going up. In all actuality, the prices are kind of staying flat. Most homes in Summit County and Breckenridge transact between $500,000 to about $2 million in price point. And my best guess is that the average investor or person who's looking for their first, second home or their first investment property is penny pinching right now, because the data clearly shows that we could be in a recession. And you don't really know we're in a recession until the news comes out, and by the time they do, they've already missed the whole recession. So likely we're in a recession right now, and so regular folks, they are more affected by market fluctuations, and so they're penny pinching and not really looking to get into an investment property, especially something like a lifestyle purchase in Breckenridge, which is mostly a discretionary purchase. However, the average sales price is up 11% because those properties that are transacting in the $4, $5, $6 million price range and higher, the reason that they are continuing to transact because those people make money in any kind of market and they're not really as affected by market fluctuations. So you're going to see that high-end luxury market here in Breckenridge and Summit County is going to continue to transact and likely won't be affected. And then obviously our inventory is finally coming up to pre-pandemic levels. I've said it many times, but we have such low inventory here in Summit County and Breckenridge, and for that inventory number to start creeping up, I think you're going to see a fantastic opportunity to start negotiating for a better deal on the buy. So if you're ready to buy something here in Breckenridge or Summit County, definitely reach out to me, because I think with all of this inventory coming up and a lot of people very fearful of the market, it's going to be your time to start lowballing and start making a deal happen. The number two thing that we're seeing is that construction costs are more of a factor than they ever were in the past, especially because of the tariffs. Because of these tariffs, all of these materials that are coming in, think hardware, lumber costs, whatever it is, all of that coming in now is going to be at a steep increase in price. And so new construction builds are likely going to go up in price, meaning that market is going to slow down, in my opinion, and you're going to see a lot of folks move towards the resale. And especially up here in Summit County, where logistically it's just a hard place to get to, you tack on the increased construction costs with the increased logistic difficulty of getting the materials up here, new construction is probably going to slow down a whole lot, and resale is going to move quite a bit. So I think in both cases you're going to have great opportunities to negotiate, as builders will probably start offering incentives to get people to move onto their units, and likely they're going to want to do that fast because the construction costs look like they're continuing to rise. Number three, migration and policy are shifting demand. We are still getting a ton of out-of-town buyers from California, Florida, Texas, New York, etc. And they're still in love with the lifestyle here. So the demand is certainly still there for specifically the lifestyle. But you're going to see that policies are changing the outlook of what the market looks like here in Summit County, especially when it comes to short-term rentals. All of the towns have not changed their minds in terms of the restrictions that are going on here in Summit County. So you have plenty of zones in which you can get a short-term rental license, but in most cases, you cannot get a short-term rental license, which is downplaying the investment opportunity for a lot of buyers. They're moving away from those neighborhoods that used to be able to get a short-term rental license, and now they're looking towards ones that can either get the short-term rental license, or what you're seeing a big shift in now is toward what we call the mid-term rental in the real estate industry. So you have a short-term rental, which is usually 0 to 30 days. You have a long-term rental, which is usually 3 to 6 months, up to a year or more. The mid-term rental, however, is that month-to-month. Typically, you're looking at somebody from the Front Range, a remote professional, a traveler, somebody who has remote work flexibility, and they would just want to stay in a place for a month or two and then go to another place and just kind of explore. So you're seeing a lot of these month-to-month rentals become more common, and because of the lower property management fee that's associated with this midterm rental, your revenue numbers end up being pretty good. In most cases, not as good as short-term rentals, but in a lot of cases, actually just as good, if not better, considering some of the homes. You think about a home that's 4,000, 5,000 square feet in a high-end neighborhood like Shock Hill or the Highlands in Breckenridge, and likely you're not going to get people who are just going to rent for a night or two. You're looking at a family of like 8 to 14 people that want a whole house to stay in, especially during the holidays. If the whole family has flexibility, you'll see people rent that house for the entire month. And then lastly, you are seeing locals here actually leave Summit County because of the rental restrictions. They feel that the town and the county has encroached on their investment, killed their appreciation, and they feel there's really no investment future. I tend to disagree slightly. I do agree that they should be able to short-term rent their property as they please, but I think the value in a Summit County property is likely going to stay for the long term because of the scarcity issue here, just not having enough inventory and such high demand for the lifestyle. Holding onto a property for long term, you're definitely going to appreciate and make some money. Now, as a person who owns 2 short-term rentals here in Summit County, I can speak very well into what the rental policies look like. So if you're looking at property for an investment play and you're looking to make some revenue to offset some costs, definitely reach out to me, because I've been renting my properties now for 7 years here in Summit County, so I know exactly what's going on. I'm on top of everything that is happening, on top of all of the policy changes, and I've made some really good money renting out these properties. Today's prices, it's a little bit different. You're looking to more offset the costs than anything. See previous videos in which I say the lifestyle is the investment here and the long-term appreciation, principal pay down, things like that. Your ROI from a short-term rental perspective isn't going to be that great. I know you guys want to hear better news, but I just want to be transparent with you that if you think you're going to come in here and buy something with leverage, 20% down, and then cash flow, it's just not going to work in this market. You're going to either have to pay full cash, and you can look at this property as like a forced savings account or like a dividend investing account where you'll make about 4 to 5% on your money every year, plus you'll get the appreciation long term on the growth end. But if you're looking at it from a short-term rental, short-term ROI perspective, definitely look somewhere else. But I can speak to all of that, so if you need help, feel free to reach out. My phone number and email right here on the screen, and I'll pick up the phone if you decide that you want to call or text. Now, number 4, the luxury market is so interesting here in Breckenridge. We're actually seeing prices going up in the luxury market. Now, I spoke a little bit about this in the beginning, but typically people who make lots of money will continue to make lots of money in any type of market, especially in down markets, because they have the extra capital to play around with. They'll buy into the market at steep discounts, and they'll make a ton of money a couple of months later, and so they're not really affected by these market fluctuations. And for them, buying a ski home in Breckenridge is a discretionary purchase, meaning that they don't need to make it, they're just making it purely for the lifestyle, for the family, for the legacy. So if you're thinking you want to buy something to create that legacy for your family, if you're in love with Breckenridge or Summit County or any of the Colorado mountain communities, definitely go ahead and make that purchase sooner rather than later, because the luxury market is not going anywhere. As I mentioned earlier, the average sales price is up 11% year over year, and that is because of the luxury market. And if you're a seller looking to sell their high-end luxury home, please reach out to me. I'm with Sotheby's International Realty, so we have the top luxury real estate network in the entire world, and then I am absolutely killing it right now on YouTube and social media. We are getting great feedback from our sellers and our buyers about how well we are presenting these luxury homes. So you couple the great marketing, the network of Sotheby's, and the fact that the luxury market just isn't going anywhere, and you are sure to sell your home for top dollar. Number 5, buyers have leverage. Finally, we're seeing that average days on market get up into the 60s and even 70 days, and the months of supply is creeping up towards 6 months, meaning that we're pretty much in a balanced market. But for the last few years, we've always been at that 3 to 4 month supply of inventory or lower, meaning it always had favored sellers because of the rise of inventory and the average days on market going up and the months of supply. It is starting to shift towards buyers, albeit it's still a little balanced. Either way, buyers have more leverage than they've ever had in the past. Typically, these 1 to 3 bedroom properties, again transacting from $500,000 all the way to about $2 million, are going to be where you can negotiate right now, especially if that home has been sitting on the market for more than 30 or 40 days. Sellers are always motivated to get a good price, but if their property's just sitting, then they're gonna have to play hardball with you as the buyer. So think negotiations on closing credits, inspection items, contingencies, inclusions, exclusions, literally so many things that you can start negotiating on besides just the price. There's 25 pages to the Colorado contract, so if you need to figure out like, how do I negotiate to get the best deal, let's sit down and have a conversation, because I've had multiple scenarios in which I've helped buyers in the past. Recently, in January, we had a top floor condo over in Breckenridge that we negotiated a deal on, where the seller just thought it was the best unit in the complex and they were going to get top dollar for it, and we ended up negotiating about 6% off of that price, where the average list price to sale price ratio is about 98.7% right now. We were able to get it down to 94%. So that's where the expert strategy comes in terms of negotiating. So again, buyers, you have leverage right now, and definitely do not be afraid to use it. Number 6, pricing trends are mixed, so timing matters in this market. Now, I know the famous tagline in real estate is that timing the real estate market is impossible. And so what I mean by timing matters is that you just have to look at the market dynamics and see where you can start negotiating for the best deal. If it's likely that new construction is going to start offering incentives, it might be worth looking at this new construction and negotiating with the builder to see what kind of incentives and deals you can get. At the same time, inventory is increasing all over the county, so you can look at that resale, especially the older resale that was built in the 60s and 70s, and you can start hitting the seller with all the inspection items. Likely they have an older home that needs systems upgraded, or structural things upgraded, or cosmetic things upgraded. So definitely look at where the market is headed and try to get ahead of the market. I think with the inventory going up and prices kind of stagnating right now, you can find a really good deal if you're smart about it, and obviously I can help along the way when it comes to that. All right, so now we're going to talk about some neighborhoods to watch for in 2025. I've compiled a little bit of a list here. Right now, the Highlands in Breckenridge, obviously on the golf course, you've got golf course views, mountain views, larger lots, and there's really steady demand for those homes. So if you're again, a legacy buyer looking to build a legacy for the family, then that is somewhere that I'm always going to look, because the quality of construction there is just incredible. You've got these massive Colorado mountain modern mansions, a mix of all different stylings from cabins to mountain modern to eclectic. And so there's plenty of inventory for you to choose from up there, and it's definitely going to be the home that you want to build a legacy for your family. We've got Shock Hill, which is the premium location here in Breckenridge, just on the west side of town, closest to the gondola. It actually has its own private gondola stop, which is really nice. And again, you are premier location being right outside of Breckenridge. You can practically walk downtown or take a shuttle. You've got the Nordic Center traversing throughout the entire neighborhood, which is really nice, adds a really serene, peaceful kind of setting to it. And again, very similar to Highlands in terms of the style of homes, all bigger homes, 4,000 to 6,000 square feet and higher, a mix of mountain modern, log cabins, eclectic, timeless designs. So again, plenty of inventory for you to choose from. Those two neighborhoods obviously being in the luxury segment, you're not going to see a huge discount on price in those luxury homes, as those sellers obviously don't have to sell. So again, this is more of a discretionary purchase if you're looking to do a purchase like that. And so now we'll talk about some other neighborhoods. We've got the historic district in Breckenridge, kind of mixed signals going on over there. It's charming because you have the history of Breckenridge, but because you are in the historic district, you have architectural guidelines which are extremely strict. And so when it comes to the exterior of your home, it kind of has to stay old school Western Victorian style and can't really be changed. Interior wise, you're pretty much free to do as you please, but exterior wise, you got these older buildings that in some cases just kind of look like dilapidated, but it is charming. So just some things to consider there. 4 o'clock I really like, as there's increasing inventory right now being right next to the 4 o'clock ski run. Think practically ski in, ski out, or walk to a chairlift or walk to downtown is kind of what we're talking about here. But you're seeing a lot of older inventory come up for sale, and you're seeing some really good prices right now, specifically 2-bed, 2-bath condos that are floating around $1 million that were previously transacting for 1.1 to almost 1.2. So I think there's a great opportunity to negotiate there. And then other markets outside of Breckenridge, specifically, I love the town of Dillon right now. I think there is such potential for the future, although the town board is very mixed on what's going to happen there. There's still a lot of potential for new development in Dillon, and one of the projects just got approved, Waterview at Dillon, which was formerly Uptown 240, that went into bankruptcy and eventually foreclosure. Another developer bought it and is now breaking ground on the new development. So you've got tons of new construction opportunity, I think, coming to Dillon, and you can still get a short-term rental license so you can start making money. And then the other one that we have is Silverthorne. Silverthorne has the most buildable land in the county, and they are building. So you have plenty of new inventory to choose from. And I think with the construction costs rising right now, sellers are going to have a little bit of a harder time. Builders are going to have a little bit of a harder time selling their new products. So you might be able to get some deals either through incentives or a deal on price, something like that. And then there's some other things coming in the works for Silverthorne that I can't yet speak about, but big commercial opportunities that I think is really going to transform Silverthorne's future. Now, what does this all mean for you guys looking to buy or sell in this market? For buyers, I would definitely look at what's right for you and start negotiating. I think a lot of buyers are apprehensive and that they don't want to insult the seller for whatever reason, but I would try to take your emotions out of it, at least in the beginning part of throwing out offers, because you just never know what a seller is going to say. And with this changing market dynamic, I think you're going to have such a leg up if you're willing to negotiate and throw out some lowball offers or offers with better terms for yourself. Sellers, I would definitely be pricing ahead of the market, be first to market. So wherever the market's heading, get ahead of that. If you see that prices are kind of stagnating in your segment, then we have to be priced slightly below that to attract more buyers to your property. If you're priced 2 to 3% higher than the market or the neighborhood and everything else is selling and you're stagnating and you're sitting there wondering, well, what happened? Well, you didn't price ahead of the market, you priced behind the market. The market is no longer increasing and going crazy. It's just stagnating right now. Buyers are looking for sellers who are actually serious. And as more buyers come to the market, maybe if interest rates come down, you're going to want to be the lowest priced option or the best priced option available out there, so you can move your property quick and you don't have to deal with sitting on the market for a long time and dropping your price until the point where you're selling your property for way lower than you actually thought. And then finally, for my investors out there, it is so imperative to understand what the Breckenridge market actually is in terms of both short-term rentals and long-term investment strategy. Remember that short-term ROI is kind of gone these days unless you're paying full cash. And again, you can just look at it as like a dividend investing account where it's going to pay you back about 3 to 4, maybe 5% a year, but the long-term investment strategy is holding onto your property for 7 to 10 years and banking on that appreciation. So as you can see, Breckenridge is no longer a one-note luxury market. If you're unsure what to offer, where to buy, trust me, you are not alone in this market, and I have plenty of market expertise so I can help you look and navigate this market to make sure you're getting the best deal for yourself. My name is Anthony Soul with Live Sotheby's International Realty. Again, I own 2 short-term rentals, a primary residence, and I've been selling real estate here very successfully for the last 6 years, and so I'm very happy to help if anything comes to play, or if you're looking at an investment opportunity or you're looking to create that legacy for the family. In any case, guys, feel free to give me a call or text me or email me, and I'm happy to answer and help guide you through this real estate market. Thank you so much for watching, and I'll see you in next week's video.